So now I am pleased to be able to present to you Mr. Stephen Temis. Steve is a highly successful entrepreneur and trader with over 25 years of experience in the equity and options markets. He's the founder and managing director of Lincoln Capital, LLC, a hedge fund, and Lincoln Partners Group, a venture capital fund. Steve recently also launched an exciting new crowdfunding platform called Early Shares, which is focusing heavily on the entertainment and music industry. Forbes listed Early Shares in its 10 companies at South by Southwest to look for in 2013. Early Shares has been featured on national television, and Backstage named Steve one of its top 10 digital all-stars. Steve has graciously traveled to Full Sail today to talk with you about entrepreneurial thinking, how crowdfunding is affecting our industry, and the concept that a lot of us at Full Sail can understand, which they call passionomics. So please join me in giving Steve a warm welcome to Full Sail.
Thank you. Is this on? Everybody can hear me? Thank you very much. I'm happy to be here. You know, I currently run 3 businesses right now. I run a hedge fund, which I've run for 15 years, and a fund that invests in small startup companies. And the third business I found 3 years ago in Miami, which I'll get to, called Early Shares. And it's really put me in an interesting position right now because I, all of a sudden, am very much in demand. Why am I in demand? Because I have access to capital. And no matter who you are, you could be the biggest star in the world, you could be just starting out. You could have a company with huge revenues and a great following, you could be a company with an idea. Everybody needs money, period. And we have created, or are trying to, jump ahead of what's, in my opinion, the next phase of funding, which is what they call peer-to-peer funding. Getting investments from fans, people that know about you, and a different way to reach a universe to get money to fund your projects or your things. So I'll give you a quick background of myself. I started out, you know, I went to college at Tulane University. I've always been an entrepreneur. And I had a t-shirt business, I had all kinds of businesses, but my real passion was trading stocks and options. It's the only thing I really understood how to do because I had a mathematical mind, and I got all my friends involved, and we opened a little account, and push comes to shove, I end up in New York. I don't know anything about being in New York, but I figure if you're gonna work on Wall Street, you have to be in New York. People told me you have to be really aggressive, and if you're aggressive, you can get in the door and get a job. So I said, I can do that. I ripped a page out of the phone book. I started at A, and I got to BU, Butcher and Singer, a small firm that was right on Wall Street, right at the New York Stock Exchange, and that's where I learned my business of trading. I was there for a couple of years. I went on to Oppenheimer & Company, which is a highly entrepreneurial firm. It was back in the days of, you know, hey, you have an idea how to make money? If it's legal, go do it. We're behind you, which was great for me because I always like to be my own boss and have my own thoughts and, you know, try to come up with my own ideas. So it was perfect for me. Did that for many years. Unfortunately, I was in New York during 9/11. I lost 13 very dear friends, and I went to 13 funerals, and it was really terrible. And I ended up saying, you know what, I've had enough. So I kind of retired from the business and took a couple of years off. And I came back and I started Lincoln Capital. And Lincoln Capital was really a small fund that was to give me something to do and trade my own money and a little extra money. And it wasn't very ingenious. I was born on Lincoln's birthday, so I called it Lincoln. But it sounded official. So at the same time I started that, I also started a fund to invest in small companies because I love small ideas that could get big. And that's something I've always focused on. It's something that free thinkers think about, and you know, something I wanted to be involved in. So a lot of the companies I invest in through the fund, I end up on the boards, or I end up being very influential down the road because my expertise may not be the expertise of someone who, you know, builds a video game or does something else, but I bring the business mantra. So it's been a good mix for me. So I moved my family 3.5 years ago to Miami. And I built an office in Miami, and I figured I still have an office in New York. I kind of go back and forth, although I hate to go to New York now. A friend of mine from college said to me, you know, would you meet this guy? He's got a really interesting idea for a business. He's a local guy. I think he's looking for some dough. And I said, look, I'm too busy. I really can't do it right now. So he goes, a month later, he says, 15 minutes, just talk to him for 15 minutes. So I said, okay, fine. So the guy came in, and he had a really interesting background in business. He was really a serial entrepreneur, had a ton of startups, most failed, some of them were okay, but he somehow or another got into the restaurant business, and that turned into doing 35,000 school lunches a day. So he has this business, and he says, you know what, I do $4 million in revenues backed by the government. So it's pretty much a guarantee that I'm gonna get my money. And I can't borrow $500,000 to expand my business. I've gone to every single bank and lending institution in South Florida. I just want to build a kitchen in Orlando. I can increase the amount of, I could do everything. Nobody will give me a penny. Wouldn't it be really neat if I could go to my friends and family and people I don't even know, they could put a little money in my company, I'll sell them a piece of it, and there, I have the money. I said, it sounds like a great idea. It's totally illegal, but it sounds great. But what was really interesting at the time, and by the way, that meeting, that was a 15-minute meeting, 2 hours later, I was like, wow, okay, this guy's on to something. But what was happening was, Kickstarter, which I'm sure everybody knows, at the time had just started. And Kickstarter has one investor in the whole company who's a friend of mine. So I knew about it from the beginning. He said, you gotta check this thing out. He's a brilliant investor, and he wouldn't be in anything that he didn't think had some real promise. So I was really mesmerized by the whole thing. And at the same time, in Europe, particularly in Ireland, and mostly in Ireland, maybe a little in the UK, there was a couple little companies popping up that were doing something called equity crowdfunding. What's equity crowdfunding? That's getting a group of people together, and instead of selling them a watch or something like they do on Kickstarter, pre-selling it, they actually can invest in the business. And it started out with pubs. There were some pubs, and if you gave X amount of money, you got a bunch of free beers, you got your chair at the bar, but you also got some sort of revenue share from the bar. So it was really kind of ingenious. So I said, you know what? And that was really where his thought process was. If we had a company that people could come, present their company to the universe through the internet, maybe there's a missing link of investors. So I forgot about my slides. Although this picture, I was probably reading sports scores at this time. Hold on. Okay, so what happened is, we built this website, earlyshares.com, and the website was really a landing page for anybody who thought that this would be a really interesting way to raise money. And lo and behold, we got thousands of signatures, and it was really neat for me because I took the signatures back and forth to Washington and met with representatives and congressmen and this and that to try to promote this, because at the time, the economy was really in bad shape. There was no money, and you need to spend money to make money, that saying? Well, if you can't borrow money, businesses can't get bigger. So we were really in a terrible spot. Banks had shut down, and the administration needed to do something. So we had on our website, in addition to signatures, we had little videos on how we contemplated equity crowdfunding would look in the United States. We basically made them up out of cartoons, and they were only in our mind. That was it. And last April, actually, the Jobs Act was passed. The Jobs Act jumpstart our businesses. It was signed in April by the president into law. And it was really great because the day that the Jobs Act was signed into law, there's a website called Startup America. Startup America is founded and funded by the White House, and to promote actually starting up America and teaching people entrepreneurship, et cetera. And they featured our website the day the law was passed as the way to do equity crowdfunding. So, it was kind of like Oprah Winfrey saying, I like your muffins, and then there's a line around the block, and the site crashed, and this and that, and I'm like, okay, maybe we really have a business here and a real thought. So fast forward to today, we have 20 employees, a little over 20 employees now. We have about $150 million worth of deals in our pipeline. We have about 60,000 registered investors. We have 2,300 companies which have signed up, about 400 of which are pretty much through their process of signing up. And so this whole time I'm watching this unfold, and it's exciting and everything. We have more money. Everybody needs money. It goes back to the same thing. every company, every project. How do we get the investors? That was really what was my main thought. And how did we let everybody know? Let me just explain real quick what the Jobs Act is, because I think that's really important. Two things happened in the Jobs Act. I'll make them very brief, but the first is unaccredited investors, which is the 99% of the United States, can now invest in private equity deals or private deals or deals that, in a restaurant, in a song, in a writer, in a store, anything. Any deal that's not a registered deal is a private deal, and this is the first time in history that they've been able to invest in those. That's $33 trillion in savings that could be invested in these deals. The second part is very interesting also. It is general solicitation. What does that mean? The old days of doing deals, there's something called an accredited investor and something called an unaccredited investor. Unaccredited is everybody, the 99%, so the 1% is accredited. What does that mean? The definition is you've had to have made over $200,000 a year for the past 2 years and have a net worth of over $1 million excluding your residence. There's actually 8 million accredited investors in the United States. Last year, only 2%, approximately 2% of the 8 million investors actually invested in a private deal. Well, what does that mean? That means that the deals can't find each other. The way it used to occur is you had to find an investor for your company, either by friend or family or somebody who referred you. You had to know them already. That was the law. So once you found the investor, you said, okay, here's my private placement memorandum. You're number 13. Now you want to hear about my company? And the guy said, yeah, sure. And then you do your pitch. Well, that's very cumbersome because you have to do a ton of pitches. You always have to be dressed nicely. You're always afraid you're not going to say the same thing. You're going to forget things, this and this. It's very, very, everybody in here at some point in time probably is going to have to raise money, and it's tough no matter what. But that really was tough, and that's why only 2% of the people ever saw the deals. The deals couldn't find the people, and the people never saw them because they didn't have the network. So what this law did is opened up the solicitation of these investors. So in other words, you could take your project, your film, your company, whatever it is, and put it on my website with a video description, talking about yourself, make your presentation a video, have all your financials on there, talk about, key people in the company, whatever you want to load it up and put it out for everybody to see. So now you're going to be able to, the intersection of finding the money is so much easier. So that's really what the law is. Sorry, I ran ahead of myself. This is going slow, sorry. This just shows you, what this slide is showing is the different pockets of money that are available. But basically the ones we really care about are 33 trillion. The marketplace, hold on, am I doing this wrong? Hold on, let me let this get through. The marketplace for this is, so what's happening? The Kickstarter is a perfect example that everybody knows. I personally think that the age of giving some sort of a reward for giving money towards a project or something like that is pretty much over. I mean, it came and went, it was great while it lasted, but nobody gets anything from it. The Pebble Watch was the first product that Kickstarter came out with. That was their first really big successful, over $1 million, whatever. And all you got was the watch. And then the company went out and raised $50 million at a huge valuation, and all the guys made a ton of money, and everybody got their watch. So I think that everybody wants to feel a part, but you also need to have some upside. Upside is really what's important. Hold on, getting there. Oh, there it is. Right now, the existing non-equity crowdfunding that's probably a big piece in actuality of the entire pie. So there's a tremendous amount of ability to raise money. And people are raising money with their passion. So now you're able to go to your fans or to people that care about something that you would care about and who can relate to you, who would want to help you and be a part of it and make money. That's really important. One of the things we've done at Early Shares is we've partnered with some channels. And this is just a quick Cisco, who's the networking company, is a big partner of ours. Cisco has an interesting program in the tech business where they have an incubator. They take approximately 14 companies under their umbrella. They seed every company. They bring them under Cisco's umbrella, and they teach them how to make your company work. The ones that they like, which are probably going to be 2 or 3 out of each class, or maybe 2, maybe 1, they actually give more money to, and then they come to us to raise the rest of the money. So here you have something, it's always important, no matter how entrepreneurial you can be, to have somebody big who's in the industry, who's behind you saying, these guys really know what they're doing and they're worth the shot. So that's the Cisco. On the music side, I met a gentleman named Stokes Nielsen. Stokes has a band called the Lost Trailers in Nashville, but more importantly, he's a manager of a lot of musicians. He has a big video business, and I met him actually through a finance guy I'm friends with in New York. And the music is becoming a very large portion of our business, particularly in musicians that have tremendous following. It could be social media following, it could be YouTube, it could be, however they have fan attachment, or it could be, the best or, you name it. I mean, it could be publishing. We're doing things on publishing, which we were talking about earlier, because you have now the ability for fans to own a piece of the content, and that really puts them in touch with the artist. I mean, can you imagine in a publishing is a great example, because you can have, imagine sitting in your car and saying, and the song remains the same by Led Zeppelin comes on, and you bought a piece of it. And you're like, they're my partners. Led Zeppelin's my partner. I just made 3 cents that song played. Those things pay out every year. They're great investments. It's not kind of like finding the new star, but what it does is it gives a tremendous amount of credibility and marketing. You're creating Pied Pipers and marketers in your fans, and that's really the key. I'll tell you a quick story about a company that is not really related, but you'll understand the concept. We have an organic dog food company that came to our site to raise money. They're raising $250,000, and they value themselves at $2.5 million. They have a video up, and it's got a guy in a lab coat, and he says, the dogs look great, the teeth are great, this is a great product. And they explain why they need the money. They want to get in Whole Foods and blah, blah, blah. And their final pitch is, if you invest $250 in our company, not only will you get a share and participate in the upside, but we're going to send you a case of our dog food. You're going to love it. So think about what you've done there. You've actually just brought on 1,000 new clients who are going to probably 5x multiply through social media, through their friends, through telling everybody I just invested in this great dog food company. And you have this Pied Piper marketing machine that really is invaluable. And you got paid for it. Musicians, it's very similar. Movies is another great example. For the first time ever, we're going to see how people would invest their hard-earned money as opposed to just buy tickets to a movie or a CD or whatever. So if you have a movie, it's a marketing machine. If you can present the movie, we're working with a lot of big studios, because even studios have come to the point of, we need extra money. This is capital that is by our fans. It's invaluable. So you play a trailer and put the synopsis and have webcam of the director and this and all these kind of fancy things with levels to invest. And people watch the video and nobody wants to fund it. Okay, why not? This is now the first time that you can actually, before you've taken the movie and put it out, you can go back and try to figure out, what did I do wrong? What can I fix? You actually have a shot to fix it. And one of the things that Early Shares does is we offer people who come, issuers, meaning anybody who's trying to raise money, a special window. That window lets them see who cares about their stuff. So, and what comes out of that window is really interesting. So in that example, it may be that the trailer stops, everybody stops watching the trailer at 1 minute and 10 seconds. Why is that? Well, what came out at 1 minute and 10 seconds that turned off everybody? But more importantly, if it funds really quickly, it shows that the masses not only think it's a great trailer and want to see the movie, but wow, I think they could really make some money. And that has huge volume for marketers to see, for the rest of the money, for big institutional money who are watching on the sidelines to see how the fans would react. So it's become an incredible marketing tool in itself. Westcor is real estate arm, which I won't really get into too much, but real estate is another part because it's very expensive to invest in real estate. And now we're offering a way that people can invest in their local shopping center and own a piece of it. And that's a whole nother area, but it's very exciting. Finally, 5x5 Media. 5x5 Media is a group who I met in LA a few years ago, who wanted to do a partnership with us. They're very interesting guys. There are about 10 people involved in 5x5, 10 principals. And each one of them come from different areas. They come from TV production, writers, directors, you name it. But they all have one thing in common. They all worked for somebody else. At some point, they all worked for somebody else. Perfect example is a gentleman named John Strauss, who is one of the partners there, wrote Something About Mary, the movie Something About Mary. And the movie, I think, grossed $500 million, and the Farley brothers laughed all the way to the bank, and I think he got paid less than $1 million. And that's a perfect example. And he and these guys got together and said, you know what, we have to own our own content. We want to control our own destiny. So they came together, and actually, they produce now most of the top big TV reality shows. They do Revenge of the Nerds, Fashion Star, a new one with The Rock. They're coming out with some movies, and they're doing some movies that we're doing with them, which are very interesting. They're utilizing YouTube stars in movies that are takeoffs, comedy movies, but not using traditional actors as stars. They're using the top 6 YouTube stars, for instance. And that kind of shows you, if you have the top 6 YouTube stars who have 11 billion views, their audience is so phenomenal and so dedicated that in this movie, they're not even paying them. They're saying, we'll pay you on the back end. You just have to promote it with us. But where they can finance it through us is they can go and tap that network. And the same way you would do, a Kickstarter or kind of reward program where you said, maybe one of the things is if you invest 25 grand in the movie, we'll come and shoot our next YouTube video at your house. And the fans are rabid. And that's really where the interaction is. We're doing a deal right now with a big race car team because think about NASCAR. These are people who want to own a piece of their content, whatever the content may be. So the world has really changed, and it's really, and I really do think we're in the first inning of this. You're going to hear a lot more coming up shortly. This is really going to disrupt this whole business because a lot of times, from the artist side, artists deal, the artists usually do deals with studios, with record labels, and record labels own them. Studios own them. Everybody owns them. And this is a way to keep their own content and have their fans finance it. So wouldn't it be great to have my fans finance an EP or an album that I'm going to do or a tour? Tell me where you want me to play. You guys finance it, and we'll share in the profits together, and I'll play in your town without having to work for the man. And I think that now eventually, as people get big enough, you need a label. You can't get away from a label. But your value proposition of going to a label and saying, look what I've done. I have this huge fan base. Not only do they love me, they've invested in me over the years, and I've done this, and this is my success rate, and here's what I did in the charts, et cetera, et cetera. Your value to them is so much more, and you're going to be able to do a much better deal for yourself. This is our music page. Where it's very fan-based again, but I want to get to, so we did a deal with the Lost Trailers, with Stokes, to try this whole thing out. And we funded a song We raised $250,000 to fund the production and promotion of a song called It's Going Down Tonight. And it had a lot of reception right away. It's just a good, fun-loving song, and it was a very typical music deal. And one of the things we didn't talk about, which I'll just talk about briefly, is if you get a return on your investment, it's a security. So you can peg returns of investment any way you want, as long as you do it in the confines of the law. And I'll give you an example of what I'm saying. A lot of people, at the beginning when this was still a concept, and I was meeting with people in the industry, whether it's movie studios or big music people, they all said the same thing. And one guy said it the best. Because I said, what about, funding a tour of one of your big artists, through this? The fans would love it. The guy's got a gazillion fans. And he said, you know what? You have to open up yourself. And it's just transparency. You have to open up your books. And I guarantee you that the investors are going to look and say, wait a minute, you stayed every night in the penthouse at the Four Seasons during this whole tour? If you stayed at the Days Inn, you would have saved us $15 million. That's $15 million more to the bottom line. And he said, why would anybody ever show that? Movie studios are very traditional, very typically, buy their own box office tickets, fudge the numbers, make things look great. Nobody really wants to open up the world to let them see. So one of the things that we're working on is, as an example, if you were to raise money for a song, if the song, and you could tie a matrix to it. The matrix could be, if this song gets in the top 10 of the iTunes downloads in the first 8 weeks, you get back double your money. Now think about that for a second. The marketing that you create and the Pied Pipers you create out of that, it's almost can be a self-fulfilling prophecy. And we've done studies that show that the marketing budgets for promotion and for terrestrial radio, for satellite, for digital, far outweighs the kind of promotion you get from having these Pied Pipers who own a piece of the content. And it's so much better, and you're getting paid to do it. So it's really a whole new concept. And it's actually, we got lucky, not lucky, but it was a very good song. But the song It's Going Down Tonight was picked up by Westwood One to be the theme song for the Sunday night NFL football on 500 Westwood One radio stations every night at 8 o'clock. So that paid off right there. Not everything in these deals pay off, but you never know, and that's what we're trying to give people at least a chance to be a part of it. This is obvious, the benefits. The real benefit, I think, in the entertainment business is the ability to own your content still. But this is, to monetize your fan base, to going back to our investor dashboard, wouldn't it be interesting to know that everybody that invested in your song was from Tulsa, Oklahoma? I mean, you wouldn't have ever known that. Now you have it right in front of you, and guess what? You can be for sure you're going to tour in Tulsa. You can be for sure you're going to promote the song there and spend extra money there. So it's giving you insights into what people really want, like never before. And the investors obviously still get to be a part. They feel like they're a part. In fact, we encourage anybody who raises money from us to have constant dialogue so that everybody, because look, the answer really is you're going to keep going back for more money. You're going to have more projects. The companies need more money. And the more investor relations and getting people feeling like they're a part of it that you do, the better off you're going to be in the future. So that's something that we really encourage. Plus, there's some things that are really going to explode big, and people have a chance to finally be able to get in on those. And then the final thought just comes back to this phrase which we trademarked, actually, called passionomics, which is the intersection of passion and economics, which is really what this is. And it's the passion on both sides, the investor and the issuer. And this is what we really feel is going to be the future and how we are set up to do it. A couple of the questions that were sent over were really about, entrepreneurship and, do I do this on my own at first, or should I work for a company first, or things like this. And I think this would be better served, if you guys asked, and remember, a lot of my insight is really going to be, I'm sure even you guys use this phrase, if I knew then what I knew now, wow. So this is kind of like me. I've seen it. So I mean, hopefully I can kind of like instill some of my thoughts and things that have worked for me. You know, and it could help in some way or another. That's it.
Thank you very much, Steve. Thank
My
you
pleasure.
for that. If you have questions, please come either to that microphone or to this microphone, and don't be shy.
Yes.
Hello, so my name is Frank Monroe. I wanted to ask the site. You said any project. Do you mean like if you work on an album or something? Could you go to the site and promote it, follow for investors to work on an album trying to produce?
Yeah, what you would do is, and you know, this is coming of age right now. By the beginning of January, it'll be much easier, the interface for these projects. But what you do is you go on and you upload your stuff. It could be a video talking about it. It could be financials. It could be things about you. You know, look, at the end of the day, this is a security, and this is taking people's money. So there's a tremendous amount of due diligence that's involved to make sure that everybody's on board. There's no crooks. You know, we have to do due diligence. That's part of our process. But the process is very easy. You go on and submit your project, and then you're contacted, and then we go through and pick out the ones. And as it grows, right now we're being as picky as we can be because we want everything to be as great as we think it could be. As this process grows and people come here and know to come to be looking at these kind of things, we're going to be opening it up much more for you know, really kind of indie, smaller thought processes. But it's very easy. You just upload it, and then that's how you start the process.
All right, thank you.
Sure. Yes.
Why you and not Kickstarter or Indiegogo?
Well, that's a great question, but a very easy one. Kickstarter and Indiegogo don't do what I do. They stop it at giving you an album or giving you a credit or doing something like that. I take it to the next level, and I give the people who are involved a chance to make money on the back end, which they don't do. So I take the Kickstarter model and enhance it with the chance of making money on the end. I think that you know, it's not really competition because it's the same concept, but we have this kind of different ending. You know, you have to make a choice whether you want to sell part of your ownership, because that's really what it is. You're selling equity in yourself or your project or whatever it is. It could be a video game, whatever it could be. You're still, even though you're still going to give away the same stuff as on Kickstarter, you have to give away some ownership. And that's what really makes it different. And I think, personally, that that's what people are really going to care about more, because if you can really get the same value proposition of rewards and products and things like that, but still the upside of ownership, I think it's going to dwarf the reward programs eventually.
But there's like, there's some projects that gross over millions of dollars on Kickstarter and Indiegogo without people getting any money back. So why would I invest at your site and having to put money away to people while I can do the same and get my money, like not give any money away?
I think that if you can get the same amount of money, it's no concern of you, then I would just do it that way. You know, that's really the answer. But I think that if you can gross $2 million in something, you probably really left $10 million on the table. You know, if you really showed ownership, because think about the person who's buying, you're really attracting investors also. Not only people who just want your product. Right now on Kickstarter, you only deal with people who want your product. When you find other investors and they say, wow, this guy just raised $2 million on some video game, this is amazing, I want to own a piece of him. Your value is much bigger all of a sudden. So if you can do the two together, that's really, you know, why I think you're leaving a lot of money on the table. But it's all selling in yourself. If you don't want to sell any piece of yourself, then you wouldn't do it.
Thank you.
Sure.
How's it going? My name is Mike Torres. I've actually been dabbling with an idea very similar to this, and was wondering what are some of maybe the logistics of, like, okay, someone can come in, they make their profile or whatever, they throw out their project, and then someone invests in it. How can you promise an investor that they're going to get back, or like what's the actual process of like if I give you $10 to your bank account, like how am I guaranteed or not guaranteed a return? Like how does that work? Like do you have to actually record all of, like, because the way that I was thinking was you would have to literally record all of the artists' like tour dates, and you would basically be the record label in a sense.
Well, you know, that's if you want to do it in a. That's a couple part question. The
Yeah.
first part is that there's tremendous legalities with this.
Well, that's exactly what I was wondering. There's got to be loopholes.
Well, that's why we've done it all. It's taken 3 years to build it.
Okay.
I mean, these are securities. These still have documents, and these still have, good boy, bad boy clauses. And, first of all, the word guarantee is a bad word in these deals.
Does that bar people who are already signed from using your site? Because I would think
who already signed with it. Well, that's actually an excellent question. And it's something that is kind of really on an individual basis.
Yep.
We do have artists right now that we're dealing with who are older, who've been around, who are very well known, and kind of like stopped recording for a while and stopped touring, and all of a sudden they're running out of money, and they're like, I got to sell some of myself and get back out on the road. And it's names everybody knows, and they're already signed up with people, and it's all a matter of working out a deal with your label. Because the fact is that traditionally, how do you get the money to do that? You get it through your business manager, who gets it through investors, or the label gets it through investors,
Yeah.
because they don't, have all this money sitting there. They go fund it. So if you bring to them a proposition of what they would consider capital from other sources that enhance your marketability, and you cut them in on it,
Normally
then
they'll be
that's
okay
the
with it.
answer.
Okay. So then what's the actual process?
The actual process, well, as I said, the process is what's really great about this is there's no process, because it's kind of a whiteboard, and you can do it as long as you do it in the confines of the law and you offer a security. Those are your two mantras. So, for instance, what we were talking about with the Lost Trailers, we did that as a typical deal. So a typical deal would be we raised $250,000 for the song. And so if you, as an example, put in $50,000 as an investment, you got 1/5 of all merchandising off the song, all download revenue, all anything you could think associated with the song. Publishing, you own the publishing rights 1/5 forever of that song.
If you put 1/5 of the total money that was raised, then you own 1/5 of the project?
Correct.
I feel like that, but then what if you put like $10? I guess you own a tiny.
Then you own $10 divided by $250,000.
So then is there like creative, I guess, leeway between the investors and the artist? Or like, let's say if it's a movie, like now they want to use the movie or part of the movie for like a commercial or like who knows what.
The investors are investors. They're not managers, and
Yeah.
they're not in the day-to-day. If you think about it like a business, think about it like a company, just as an example, because then you'll get it. And you invest in Pepsi-Cola stock,
Yeah.
and you buy $100 worth of Pepsi stock or whatever. You can't really tell them. Well, I don't think you should do Fresca anymore because nobody likes it. You don't have that kind of creative leeway. What you're doing is you're investing in the expertise of the management team and the artist himself to make as much money on behalf of the investors as they can.
Yeah.
That's the value proposition. And that's your bet. That's your
Okay.
bet.
Okay, cool. Thank you.
Sure. Nope. Sorry.
Hi, Jim Snorf. I'm on the faculty here in sports marketing media. Have my own firm, Wall Street Strategic Capital, that does some of this. It's a very interesting concept. Do you actually look at some point to aggregate some of these different companies into a collective pool so that investors can diversify the risks?
That's a great question, and yes, we are. In fact, one of the deals we're working on is with a major label and a huge record management company, and the label is very entrepreneurial label, has found a lot of great groups. So what they want to do is, and they have a huge track record, so what they want to do is they want to raise money in a pool. So if you could imagine, the main pool is you're alongside them. They're going to find new talent. So let's say they find new talent, and they find this guy right here who's going to be the next big pop star. Okay, they're going to let the investors know, okay, look, we found this guy. He's awesome. you're our partner, you're going to be part of this. But if you wanted to, you could also invest in him directly too. So it's going to filter out. So people are going to, you want everybody to have as much leeway to be able to have hands-on experience as possible. You could let the big boys do it all for you and ride on their coattails until something cool comes along. Maybe you only like country music. So anything, you could invest in the country music category. So not only are you going to be on the parent side, you could be in the country side. So any group that comes out of country, you participate in. And then if one group comes out and you say, wow, that's really the group, you could invest in that group also. So now you're in the parent, you're in the country, and you're in the person. And so that way, we're just trying to get as much involvement as we can, to people's want.
Thank you.
Sure.
Hello, I'm Hermes Draper, and I just wanted to know, is there a minimum amount of required payment for an investor to put into like a company's product or idea?
The question is there a minimum amount of investment? That's really in the eyes of the artist or the manager or the company to decide that. I mean, it really doesn't make a lot of sense, in my opinion, to take less than $100, and I don't think you would even want to do that. But you want to encourage a little more just to have less people, but you could really set it any way you want. The more $100 investors you have, the more bookkeeping it is, and the more thought. So, but it's set individually.
And does it have anything to do with like the market value of that company, or?
In a company, sure, it has everything to do with the market value. And in fact, we have a woman who's an up-and-coming singer, and she's kind of broken out a little bit, and she's got a pretty good following. So what she's done is she's looked at herself like a company. She says, okay, you know what? My net worth right now is $250,000. That's what I'm worth. The way I'm worth it because of this. I have X amount of social media. I have this. I have following. My song, I still play in clubs. I got revenue, And she comes up with it. Why is she worth $250,000? Now, that's a hard thing to do because if you're a company, you can say, okay, I sell this many, candy bars, so I can really tell you exactly sort of what I'm worth. But when you start up companies, the value of a startup company is a very difficult thing to figure out because what is it worth today, the chance that I'm going to be big down the road? So she came up with this number, 250. So for $250,000, if she raises $50,000, she's raising 20% of the value. So she's selling 20% of herself for $50,000. So everybody who invests in that pool of $50,000 now owns a little piece of her, and she's doing it everything. So every single thing, you're going to own her in perpetuity, forever. You're going to own everything from publishing, touring, every song, every album, everything, you're going to own a piece of. So it's all in the way you want to structure it, and that's how somebody else is structured it. So yes, it all goes back to what is the value of what I'm buying.
All right, and just one more thing.
Sure.
How does that translate to like is it like $100 equals one share, or?
It just depends on it
them?
totally depends on the valuation. So if the valuation is $250,000 and you're investing $50,000 and one guy invests in it, he owns 20%. So if one guy invests $5,000, he owns 10% of the 20%. Okay. So you know what I mean? So it's just on a percentage. So you would take 10,000 divided by 250, and you would know your ownership. If somebody invested $200, you do $200 divided by 250, you know your ownership.
All right, thank you.
Sure.
How you doing, sir?
Hi.
My name is Sean Way. I just had a question. I've been touring around the world since like 2008, and in the mix of that, I built up a magazine company from ground up in 2011 by the name of Empire Radio Magazine. Have you seen that pitched through your company, through your website? And if so, what would be the best way to probably go about pitching arts, culture, entertainment magazine? And I have a global following already on it.
Just explain to me what you want to pitch. I'm unclear. So in other words, so you have a background. You've been doing all this. So what do you want to get out of it?
Honestly, I don't know. Like I woke up this morning, I said I want to change the world. Like I want to be a billionaire. So at the end of the day,
That's a start.
if at the end of the day, like, I know a magazine is not going to cut it. We all know money. It takes money to start up a business. So I'm trying to ask, like, what as an investor, what would you invest in it? I mean, I'm very sure as an investor, you would want money out of it, or you would want ownership. So what I'm asking is, if I have a successful magazine company, as an investor, what would you want to invest in it? What would you want to get out of it? Because I already have the foundation laid out.
So in other words, you own the magazine?
Yes.
Okay, so that's different. So if you own a magazine, that's easy to value, right? Because you know how many people read it. If you have any advertising, what the revenue is, you can really put real numbers to that.
Right.
And then you really have to like take a leap of faith and try to figure out what is this going to be worth down the road if I'm really successful. And you got to kind of come up, you massage the number somewhere in the middle, and that's where you value the magazine at. And how I would do it was I would sell shares in it, you know, or I would sell ownership in either the magazine or you, or the entire universe of you with the magazine. Because I would assume you do other things beside the magazine.
Yes.
So people would want a piece of everything. You know, the beauty is that there's no rule. The rule is you could do only the magazine. You could do only your touring part. You could take one song if you wanted to. Whatever you think that you could capitalize on, where you have a following or people who care enough that they would want to own a piece of it, you could go for. You know, and I think a lot of people are going to try this and come up with different ways and try to figure out the right one. And I don't know the right one. You know, it's really a very individual thing. But that's how I would start. I'd try to put a value on the whole thing.
Definitely appreciate it. Thank you.
Sure.
We have a question from one of our online wholesalers. Nestor Caro asked, how is social media expanding new opportunities and projects to the investors or masses interested in investing?
You know, I mean, we're here basically, and this is going to be successful in part due to social media. You know, I told you about the movie we're doing with the YouTubers. That's social media. The ability to interact, with fans or investors or people who care about you, you do it through social media. You know, Robin and I know each other. We grew up together many, many, many years ago and haven't spoken in tens and tens of years, and found each other on Facebook. She saw what I was doing, and you know, so the ability to be able to do that and show your wares and have a big fan base, because when you have a big fan base and you come on my site and you do a project and you go out to all your fans and say, this is what I'm doing, go check it out right away. I mean, you have the instant ability to get them there by tweeting, by everything. So I think the ability to lever off of social media is what's going to make or break most of these deals.
I have two questions. My first question is, what do you guys charge, or what do you guys charge for this business opportunity? Do you guys take part ownership of the company as well, or do you just try to charge off the back end of it?
No, that's a good question. So how do we charge? There's a few different ways we charge, and it depends on who's investing. So if unaccredited investors, meaning the 99% of the people invest, you can only raise a maximum of $1 million per project or company per year. So what happens is on those deals, by law, we're only allowed to be the middleman. We're only allowed to be the place where everybody meets, and we can take a toll. On that, we usually take between 5 and 8%, depending on the size of the project. On deals where we have accredited investors, we put together what they call an SPV, which is a special purpose vehicle, which houses all of the investors together in one. And of that, we are the managing member. So we make sure that the money is spent the way it should be spent. You didn't just, jet off somewhere. We look at it on behalf of the shareholders. For that, we get a management fee and we get a piece of the back end profit. So it's a good way to look at it is, from an issuer side or from guys like you, you get basically all the money. I mean, the money comes out of the investors for the management fee, but more importantly, we're taking a shot that we're going to own a bunch of back-end pieces. So after everybody gets back all their money, we're going to get a piece of the profits at the end. So, you know, the way the investor would look at it, that is, hey, this guy really has, you know, my interest at heart because he's going to get it after me, so he's really going to make sure that this works in the best of his ability. So that's how we do it.
And also, once you open your company up to these investors, they own part of your company. What if you're not making a certain amount of profits? What protects you from being sued by the people that own part of your company?
Well, that's another very good question. That's a better question because, and the question is, how am I not going to be sued if I don't do good? And that's a touchy subject. You know, a lot of things have to be really disclosed. This is transparency. You know, it's number transparency. It's you know, these are securities that in effect my company is regulated by the SEC. You know, this is for real. So a lot of the ways. So what we do, I'll start with what I do to protect myself. We have a university on our website. We make sure that people understand in the university, they know what they're investing in. They understand that there's risks. You know, a lot of these deals don't ever make any money. You know, people have to understand, not only understand that, but they have to take a little test to show they understand it, and they have to pass the test before they can even invest. Because, you know, the risk always is somebody says, wait, man, you know, I didn't know I could lose my money. It's like, yeah, you did. You just watched the video and you took a test on it. So you knew everything. So as many ways as you know, this is going to be, you know, the issue. And, you know, you have to play by the rules and be transparent and let everybody know what you're doing and file financials and let people know, you know, where you stand. I mean, there's no fluffing in this. This is for real. So if you do that and follow by those, because look, if you think about this, if you have a company and you get a bunch of investors in the company and, you know, and you pass everything, you've never been in jail, you have tax stuff, you've been audited, everything is perfect for you, and your idea is to paint cats green. That's your idea, and that's what you're selling. And people, you know, if you don't succeed at that, people are only, they're giving money, they know the risk. You know, if you can't do it or if it's, you know, never ends up working, that's life. That's what investments are. It's the only, you get sued when you do things bad, when you steal money, when you tell people, I guarantee you this is going to make money. You know, with those kind of things. That's where you get in trouble. Just failing at your business, you know, as bad as that is and as bad as that makes you feel, and you're going to lose a lot of money and probably all your friends will run after you, but you're still not a crook. You just didn't do it. It didn't work. So that's really not what you have to be afraid of.
Thank you.
Sure. Yes.
Hello, my name is Jasmine Springfield, and I think maybe I just need a little bit of clarity on some things. I was going through your terms and conditions on the website, and there was a clause I noticed that it said that Early Shares doesn't offer advice on your different deals or transactions or whatever it is that you're going through, and it also states that some friends of mine went through this problem with Indiegogo, is that a lot of times when you do go through these different investment avenues, you don't actually get the funds or the proceeds until after your project is over. And it does state that with Early Shares that it could take even months or years for you to actually receive that funding. So I wanted to know what kind of safety net or insurance is involved.
Sure.
Is, available.
Sure. Well, first of all, the difference is that I'm regulated by the SEC, which is Securities and Exchange Commission. Indiegogo is not. So Indiegogo, I don't know how their rules work, but my rules work by how the Crowdfunding Act was written. The Crowdfunding Act says that you have to get 100% fulfillment before you get your money. And if you think about that, that's essential, because you can't raise, if you're raising $25,000 to do some project, as an example, and you raise $18,000, and you just can't get the rest of it, and you say, okay, that's fine, I'll take the $18,000. The people that invested, they invested assuming you're going to get $25,000. And if you don't get $25,000, then you're not going to be able to put the kind of money to work. Maybe you said in your thing, I'm going to spend 10 grand on this great video thing, and I'm going to spend 5 grand on this and this and this. You're not going to be able to do it. So they need the option, or they really wouldn't want to invest in that unless you got your full amount. So the law really states that the money sits in escrow account at a bank, and then the minute you get to your goal, it pays off. Now, one of the things people do is they may say, okay, I'm going to raise up to $250,000, but if I got $150,000, that's going to be good. So what I'm going to do is I'm going to close at $150,000, and I'll keep it up to $250,000. So that way people know that the first $150,000 they're going to be locked into. But you don't get the money right away. You only get it when it's complete. Everybody's documents are in, and it's all online. So we don't take their money until we get all their signed documents and everything. But it's still a process.
Mm-hmm. And just one last question.
Sure.
On average, how long would that process be?
What's that?
On average, how long would that approval process be?
I mean, if you got something that funds, in a week, it's pretty quick. It just, deals are going to go probably be on the site for 2 months, let's say. So I would say from the time that the deal closes, I'd say within 30 days. Mm-hmm. Pretty quick.
Okay, thank you.
Sure.
Hello.
Oh, hi.
How you doing? My name is Prentice Cameron. I know you weren't successful overnight. Like you say, you've been doing this over 25 years. So what, do you have any words of wisdom for me and the fellow entrepreneurs in the room?
Yeah, I do. I mean, being an entrepreneur is really doing it on your own and really kind of having a vision. And it's really hard work. And, you have to really be focused. And that's really the key, is focus. Because everybody loses focus and everybody starts to do other things. And if you have something that you're good at, that you want to take to the next level, I keep saying video game just because that's kind of a hot space right now, but you're an artist, you do whatever. That is your vertical. You don't do other things. And it comes from business also. I had an expertise. I found an expertise in trading options, and some people have that, but I know nothing about bonds, for instance. I mean, there's still finance, it's still investing, but I know nothing about it. I have a focused interest in one thing, and I'm the best at that one thing. And I think that that's really the key. It doesn't matter what you do. If you're the best at it, you're going to be successful, period. And that's kind of like has always been my theme.
Yes, sir. I have another question. Do you still invest in small businesses yourself, or you just?
I do, all the time.
Would you ever consider investing in a student here?
It's funny you say that. It's funny you say that. And I was telling Robin this earlier, there's a new concept which I'm really mesmerized by. And it's not quite ready yet, but it's in the works. And so what it is a student comes and says, I need money for school. And this is more for student loan. But you could take it to the next level also, but you'll see where I'm going with it. So you need a student loan. So the problem with student loans is that it's like a huge boulder on your back. And by the time you get out of it, it's like you got nothing, you're fed up, and you're like whatever, and it beats you, and then you lose your desire. So how do you, and what happened is that during the economic downturn, nobody was giving student loans. So that was even another problem. So some guys are working on an algorithm so that they could take a group of people in here and say, okay, you need money for your education. You need $250,000. Pick a number, whatever it is for your whole education. Then they run everything about you. And the algorithms can be anything. And they're personal interviews, and it's like your background. This is a million probably data points in it. I don't even know all the data points. And they come up with probabilities on you of being successful. And they bet on a piece of you going forward. And they say, fine, I gave you the $250, but you owe me 6% of your W-2 earnings for the next 20 years. I'll just garnish them. You won't even know it. So if you end up working at McDonald's, I lose. If you end up making millions, I win. And if you take enough people and do that, it's a really interesting business model. I mean, I love it. I think that could be a kind of a next wave. But there are some websites where people can, invest small amount of money in people's future, but it's very difficult. I would be the first to say, to invest in a student is tough. if you said to me, I'm a student and I write this code that everybody needs that nobody else can figure out, then I'm really interested. You know what I mean? So it goes backward to that focus. You know, just to invest in like a general thought process is tough. But if there's a real direct reason that you could attribute a value to, then, you know, that's a real value proposition I probably would look at.
All right, yes, sir.
Sure. Hi.
Hi, Steve. Jackie Otero, Program Manager for Entertainment and Music Business. So I know we were talking a little bit earlier about the potential effects on the music publishing industry, and I'm really interested in you mentioning how a song could be sold off into pieces and have different investors involved. So let's say I'm a songwriter and I want to try this out and I want to put one of my songs up to see if investors are interested. So let's say I get interest and I have 50 investors that are now part owners. Now for somebody that's not been involved in private equity before, that's very intimidating to think, okay, now I have to answer back to these 50 investors. How do I report my earnings back? How does it get back to them? How does the accounting work for somebody who's a songwriter and not involved in that kind of business?
Great question. The first part of it, I want to just talk about the publishing part first, because it's a little more intricate than just, you know, selling a little piece of your song. Because the problem is that if you're at a stage where you've never done a publishing deal, is one thing. If you've done a publishing deal with somebody, then you only own a piece of your song anyways, so you're selling a piece of a piece, which is fine, but it goes back into telling everybody the whole truth. It's like, I already have a 50-50 deal with you on your song, you only own 50% of it. So if you sell 20% of your 50%, that's, you know, much smaller piece of the whole. So that has to be, so in that circumstance, that's the best scenario. Because if you own half of it with a real music publisher, you're going to get the digital runs, you're going to see everywhere it plays, you're going to see it all right there, and it's spelled out how much you get. And you can just take that and show your investor. It's the people who don't have a deal yet in the publishing who want to take a shot at this. And you know, one of the things we do on our site, we really encourage this communication between investors and artists and people raising money. And as we said, it's like that's the integral part, because someday, you know, you're going to get bigger and bigger and bigger and want more and more money. Then you're going to go back to them and say, hey, you know, you helped me at the beginning. Here's a special deal for you, whatever it is. You would need to really have somebody. You couldn't do it yourself, I think, is really the answer. You would need to outsource. You know, we're going to have a whole investor relations where you could have a little, you know, webinar, and you could talk to people and you could show them stuff and tell them what you're doing. But real live, like accounting, you would need to hire out people to do that, because I don't think you could do it on your own.
So this would be more for maybe a music publishing company to get involved with this site versus an individual songwriter.
No, I think individual songwriters are going to do it all the time. I mean, individual songwriters still own a big chunk of their you know, of their music. So but they can only sell what they own, right? They can't sell the piece that the publisher owns. So I think that really is going to be the difference.
And what kind of vetting process, what kind of filtering process do they go through before they can be listed on your site for investors?
In general?
Well, I mean, I'm looking at it from the artistic side, so from like the music industry perspective.
Well, we're going to do it. We're going to look at it. We're not going to say, wow, that song's terrible. I mean, you know, because who am I to say it's terrible? But what we're going to look at is, okay, who's involved here? They crooks? They ever had felonies? Are they? Do they have, you know, real bank accounts? Have they been audited? Do they have a real place of business? You know, the same sort of thing that you would get from a, you know, going in for a mortgage or something like that. Same thing. You know, what is the accountability of the people, and what is the integrity, and what is their background? And I think that's the first filter to get through. And if everybody's legit, then you take it to the next level. And if there's people who aren't legit, then you know it's a scratch right away. That's.
Thank you.
Sure. Yes.
Hi.
Hi.
I have a video game company, and I was wondering, what would you like for us to showcase to you to get you guys to invest in us?
You know, you really want to convey, you know, what you do and how you do it and who follows. And, you really need followers. That's really kind of the answer to the whole thing, or at least be able to show that you possess something that you think is going to create followers. And so everything, as much as possible. You can't show too much. Any videos you've done, any music that you've written, any songs that you've done, and all of you are at a great position here because you could, in essence, go into one of these studios and you can really mix things that when you get out of school, it's going to be expensive or you're not going to be able to do it. And, you have resources here that you could probably use. I mean, if I'm not speaking out of turn, but, maybe, Robin lets you. So you want to be able to promote and show what you're doing and showcase it as much as possible. Background on yourself. What do you do? What do you like? What do you follow? Have you done anything in the past? Have you ever written anything that was ever picked up by anybody? I think that's the best start.
Okay. What about business plans? Do you want to see that? Or?
Absolutely,
okay.
100%. In fact, business plans is what I want to see first.
Right.
Because good business plans, like a really good business plan and an okay or good product, can be great. So a great product with a terrible business plan usually doesn't ever work.
Thank you.
Sure.
Hi, good afternoon. My name is Chris. My question is, if you put any project on your website, can you add some closures? Like, for example, put it that we do a song and we go good. Can you put a closure like, okay, these shares will go, as soon as the song go out, hit everything, just for a year or two? Can I put that type of closures, or you need to be open for the rest of the life of the song?
You can do whatever you think you can sell. People, if you have a big hit and people are going to have it for a year, you probably will never raise money again because you had a big hit, but it's tough. Because if you think about it, startup companies, and I take it always to companies just because it makes it easier to understand, but if you got a company and you raise initial, what they call seed capital, somebody gives you the first money for you to go and take your dream to the next level, they are taking the most risk of anybody for the rest of your life. They're the ones who jump-started you. So the people at first got to get the best deal. They really do. And down the road is when you can kind of have, different deals or kind of cut it back, or like, hey man, I had 6 huge hits. This one, I'm financing for, 6 months. Whatever it is, you could get away with whatever you want, but at the beginning, nobody will really take that because, the way I look at it is I'm the one who's giving you the money that's getting you big. It's like I need more than that much of a payout. So at the very beginning ones, I'd probably make them as long as possible.
I got another question. Can you buy back your shares?
That's a great question. That's actually a great question, and it's probably going to happen a lot in the movie business, in my opinion. The way the Jobs Act is written, securities that are bought under the Jobs Act exemption have to be held for 1 year. After that, they can be sold. So there will be markets for these things down the road. Movie is great because, I talked to a guy who owns a big movie studio. He's a huge entrepreneur. And he's like, you know what? Some movies, you don't even know what you're going to get for 2 or 3 years. The back end is huge. And he's like, I'll just go in and buy back all the shares. And I said, fine, you can do that. You just have to tell what you know. And that's the key. You have to be honest or you're going to get in trouble. Like if all of a sudden you just did a huge deal in 3 years on one of the products from your movie, you don't tell anybody, you go back and try to buy all the shares, and you don't tell them a material thing, then you're in trouble. But you will have the ability to buy back shares, and it happens to me all the time in small companies I invest in, and down the road, I don't hear from them for a long time, and all of a sudden they call me up and say, we want to buy you back. And the first question I'm like is, well, what's going on there? Why do you want to buy me back? I haven't heard from you in 4 years. Now you want to buy back my shares? There's usually something going on, and that's usually the answer, and I usually never sell. But you could certainly make the offer.
Thank you.
Sure.
Any other questions? How many of you all want to be entrepreneurs in the future? Okay, big group. How many of you see yourselves as an individual artist or creator of works? Okay, interesting. So we thank you all for being here. I'll leave with one last question that I know I have heard from students a lot, and that is, if you think back to all your experiences as an entrepreneur, what do you wish you knew then, or what one piece of advice would you give people who have that desire in their future?
You know, there's so many. I mean, there's so many, but, you know, to never really give up on your dream. And now is the time to do it. Now you have nothing to lose. You know, and most people's problems are they have dreams and they want to do this and they're afraid to take the leap, and then they get kind of working for a company or doing something. Even it could be an entrepreneurial company, but once you start getting to be in the real world, and you know, you have a family and you have obligations and things like that, you miss your window of opportunity, because it requires, being an entrepreneur and being successful and doing something that you're really passionate about is hard work, and it's like 24/7 work. And that's what you have to be ready to do. And, you know, people who are willing to do that, you know, I'll give a real quick example. You know, when I ran a big trading desk many years ago on Wall Street, all the young guys said, to be a trader in my firm was really the thing. You know, it's like everybody wanted to be a trader. That was the big job. So all the young guys would come in and say, you know, I want to be a trader. I want to be a trader. I say, okay, you know, how much money you got in your bank account? I'd be like, what are you talking about? I don't have anything in my account. I just started. I'm like, you got to have something. They say, oh yeah, you know, when I was confirmed, you know, I have money, whatever. I have like $2,000. That's all I have. I was okay, fine. Bring in a check for $1,500 and put it in an account here, and let me watch you trade it. And, you know, let's see how you do. And I guarantee you that everybody had a different response. It was one of two. Hell yeah, awesome, can't wait. Or, what are you, crazy? I can't risk that. That's all the money I have. I'm gonna have nothing. And that was my answer right there. I knew right away who at least had the first initial thought process to do it. So it takes risk, and everything is risk, and you have to be willing to take that risk, and now you can take it. So that would be my biggest, Robin will send out my email address. If anybody has any further questions or anything, you know, feel free to send them on. Sure. Thank you.
Thank you all for being here. Thank you, Steve. And Steve is also available for the next 15, 20 minutes. If anyone wants to come down one-on-one and speak with him, please feel free. Thank you for being here, and we'll look forward to seeing you at the next event.